CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of indeterminate length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday. It is the second day of November, 2015. Hope you had a great weekend. So glad you could join us today. If you are returning, well, welcome back. And if you're here for the first time, a very special welcome to you. Let's take a quick look at the numbers and see where we are on this first trading day of November as we head into the, downward slide into the end of the year. Seems like yesterday the ball was dropping in Times Square. U.S. markets, these are cash, okay? Not the mini, not the futures, cash. Dow Jones Industrials are up 86 points. S&P 500 is up 13 points. And the NASDAQ is up 43 points. And the Russell 2000 is up 10 points. Now, let's talk about something for just a minute. Go back historically and look at the first trading day of each month. I don't have that data at my fingertips, but I have reason to believe that you're going to find a whole lot of green. Now, if Garrett is able to join us today, and I haven't checked my email, so at this point I'll just assume that he is. He's the kind of guy that would have those kind of statistics at his fingertips. Also, if Mike Reed were to join us today, he's also a man who might have those statistics at his fingertips. But a lot of fund managers, money managers, etc., and Garrett is one of those guys. Mike Reed just trades for his own account. Garrett does trade for others. And Garrett has talked on this show about their business model, where most of what they do is on the last day of the month and the first day of the month. And they manage their trades, their positions, the rest of the month. So I might even be able to pull up an article, and we can discuss in some detail today during the show Actually, you know what I'm thinking? Burwell's going to be with us on Thursday. This Thursday, he's our every other Thursday friend this Thursday. And he's a good one who could probably tell us something about the history of the first of the month as it relates to the stock market, the futures market, options, and all that good stuff. So, U.S. markets, we got nothing but green on the first day of the month. Okay, let's go take a look at crude oil. Crude oil. Okay. Oil did not get the memo. Down 49 cents. Gold did not get the memo. Down $6. Asia, whoa, they totally didn't get the memo. Maybe yesterday was I don't know. Nikkei, wow. Big day in the Nikkei. The Nikkei's down, let's just call it 400 points. 399.86. Now that's over 2%. So that's substantial. The Shanghai index is down 56 points. That's 1.5 points. And the Hang Seng is down 270 points. That's over 1%. European markets, they have responded well to my first day of the month theorem. The DAX up 100 points, which is 1%, just shy. The FTSE is flat. CAC 40 is up 18.5 points, which about 1/3%. So those are the numbers. Europe, green. Asia, just, boy, they painted that town red from one end to the other. And the U.S. green. Okay, and then commodities red as well. Crude and gold both down. The Fed did not raise interest rates. That's no news. It was last week when they didn't raise them, and the markets did their little flip-flop, and now we're back trading today. Let's see. Currently, the S&P 500 Emini Futures is trading at 2086. We were trading at 2086 when the Fed announcement came out last week. First we ran down, then we ran back up. We put in a swing high at 85.25. Okay, so that goes all the way back to, let's see, last Wednesday. Thursday was the 29th. Friday was the 30th. Saturday was boo. And November the 1st, last night, the markets opened right here. Right there. So let's put an arrow in the appropriate spot, because we will throughout the week be referencing where we are in regards to where we opened the week for trading. And so Globex open. America is off of daylight savings time. Now, that actually affects those of us here in Arizona because we don't do daylight savings time. So most of the year, the Wall Street open for me is 6:30 a.m. Eastern. Because we're off daylight savings time, instead of being on Pacific time, I'm now on Mountain time. So the Wall Street bell rings for me at 7:30 a.m. Eastern. So it takes just a little getting used to. It's easier to get used to in this direction than it is in the other direction, right? Just about 4 months, I get used to having that extra hour of sleep, and then all of a sudden, bang. But I had so much to do last night. I just took a little nap in between projects because there's much happening, much afoot here at CFRN. And so as you know, and as we'll talk about in the show, and as we'll talk about in the meeting tonight, Globex Open Sunday night. Okay. I'll put it right there, just for now. Okay, so we had a zone last week, 82.83, which we're just above. Yeah, let's be very cognizant of the fact that these are last week's weekly trading zones. Now, this week's zones went out to the partners this morning at 6:15 a.m. Eastern, as they do every Monday morning. Once the zones are published, we don't change them, massage them, manipulate them. We do nothing with them except use them as a backdrop to our trading. And some partners just actually use them to trade. They just do the whole zone-to-zone thing. If we scoot back just a tad, we can see last Sunday's Globex Open. We opened right into a zone. Now, three things happen at a zone: consolidation, that's the most likely; rejection, second most likely; and third, hot knife through butter. And that's on an hourly chart. The hourly candle will slice right through that zone as if it weren't there. Typically what that means is price is going to return to that area at some point, usually sooner than later, but not always. Will return to that point and do the consolidation that it failed to do the first time. Now, you can have situations where there will be much consolidation, price moves away from a zone, and then slices through it. There's less call for it to come back and consolidate because it's already done it prior to the hot knife, but in most cases it will at some point come back and consolidate. Now, this was some pretty heavy-duty consolidation here. I mean, this went on from the Globex Open Sunday night, which was the 20... actually, it's this candle is the open. This was the Globex Open. This candle, not the one over here, but this one, the 25th. Okay. And so here we actually made a break for the zone below. But even if we just go from 1800 on the 25th to 1800 on the 26th, we stuck to that thing like glue. We started to open up a little bit, get a little bit of movement. Now, on this move down, we actually got down to a swing low of 51 1/4. Now, the zone is at 2048. Is that right? Let me look. No, that's not right. Let me make sure I get these right. 82.83. Yep. And then 72.73. I'm missing one there. 73. Right there. To the tick. 72. Again, today's Monday, and so my co-host on the Mondays that he can make it, Mr. Garrett Jones. He is a long wave cycle kind of guy. He really looks at the big picture, and I'm talking like 40-year picture. Big stuff. Compared to, we look at a 4-tick range chart, not to be confused with a 4-tick chart. Much different. That's very fast. We use a range chart. People say, well, how long does it take for a range candle to form? It could take 4 seconds, 4 minutes, 4 hours. I mean, it literally could take 4 days, but it doesn't. In the mornings, when things are brisk, it can happen in the twinkling of an eye, but later on in the day, it can be similar a lot of days, depending upon the market, to about a 5-minute chart. But a range chart is tied strictly to price. It has nothing to do with volume. It has nothing to do with time. Okay? So no matter how many minutes tick by on the clock, That's not going to bring you a new candle. Okay? Only thing that will bring you a new candle is a change in price. And maybe as Michael is going through the recap today, for those of you that are new, he can explain a little bit about exactly what a range candle is and maybe even give you a little history on why we use it. So, 73, 72, and then it's supposed to be 65. Now, these are from last week, remember? These are not this week's. Come late Wednesday afternoon or Thursday, I will reveal this week's zones to the general public, and that's out of respect to the partners because that's part of what they get when they become a partner. So below 64, 65, the next zone was 55, 56. I don't know where I remember now. My charts crashed last week. Okay. And I did not go back in and restructure these. Well, there. So things looked a little off. Now I know. So 55, 56, and then below that was 44, 45, which did not come into play, did it? 44, 45. Nope, we don't really need that. Because it never was it was never part of the week's trading. So we'll just remove the clutter from the screen and focus on what mattered. Okay, so price came down to the 55, 56 area. Feel much better now that I saw it went from zone to zone. Seemed like I remember last week telling you how it went zone to zone. And so from zone to zone, that's 8 points. 8 down, 8 back up. That's 16 points round trip. We consolidate again for a number of hours, okay, at this zone. 64, 65, okay. And then we break up. Here's the Fed. And we dropped down and to the tick, hit the 55, 56 on the Fed announcement, and then turned right around, and in the next hour, ran up and hit the 2082/83 zone to the tick, stopped and reversed, and came right back down to 72.73. So that's a 10 tick move. 10 down, 10 back up. Actually, we had... Now, this was the Fed hour. And so the next hour is good for trading, okay? And so we have 10, 20, 30, okay? Then we overshot to the upside just a little bit. And the next zone overhead would be, after 82.83, would be 2110/2111, so we didn't really get there. Okay. Price then comes back down. We touched 64.65 on Friday. No, I'm sorry. Today. Now remember, these are last week zones, and the zones have what I call carryover effect. In other words, if it was valid Friday close of business, just because we took one day off Saturday, and that's really all the market's rest is one day, because we open Sunday night at 6 p.m. Eastern. Start the week all over again. You know, futures rarely sleep. They take a little bit of time off each day. They take Saturday off. Beyond that, they're turning and burning. All right. And so, last night, we come down into the zone from last week. Here was the open. We opened right at a zone from last week, 72.73. Now, see, that's a zone that was published not today, but a week ago today. This zone, 72.73. So we opened in that zone last night, and we moved down to the zone below and spend 1, 2, 3, 4 hours there. And then we make a 2-hour move up to the zone overhead. We consolidate just above the zone for 1, 2, 3, 4 hours. And then we make a 2-hour run up to 82.83. And that's where I have to stop because I can't get into what else is up above other than where we're at right now. The reason that we're sitting here right where we are right now, partners know exactly why that is. I've said enough. Okay, Michael's going to come do a recap of the live trading room and talk to you about the truth about trading. I wrote an article last week, The Truth About Trading. If you haven't read that, I encourage you to read it, okay? Because so many times you get these clever emails and we get these splashy web pages that make it seem like, even a caveman could do it. And that there's never a tough day in trading land, in la-la land. But there are tough days, there are difficult days. How you respond to the difficult day determines whether or not you're going to spend your eternity, or what seems like eternity, in the 90% line or in the 10% line. Okay? Because you are going to get stopped out. You are going to have tough days. You can't change that. What you can change is how you react, how you respond to the tough day. You have 100% control over that. So what we teach you is we teach you to focus on that which you have control over, and that which you don't, you let that roll off your back like water on a duck, and you just say next. Next trade, next day, whatever the case might be. It's when we, yell, kick the dog, throw something, start trash talking ourselves about how we're a loser, we're no good, and blah, 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 we never do anything right. That is so damaging psychologically. And so I beg you, don't allow yourself to get caught up in that trap. It's not personal. The market is not out to get you. They've not bugged your office. They're not watching where you put that one contract on, or the 10 or the 100. They're not. They are way too big, and they are way too concerned with other things, whoever they are. Okay? Focus on what you need to learn. And the way to find out what you need to learn is to find out what you don't know. See? Because you can't learn everything. But based upon what you're attempting to do. And see, and if you're trying to do everything, if you're trying to trade every market and be all things to all people and just be everywhere all at the same time, that's a plan doomed to failure. Okay? You can't. So another thing that we attempt to teach you is to set realistic goals for yourself. Okay, once you've established a realistic goal, then you work towards that daily, systematically, using the same methodology, the same indicators, the same everything, trade after trade after trade. Over a period of time, you will begin to see what works for you and where you need help. And when you need help, that's where we come in and we set up a personal mentoring session. That's whether you're a partner or even if you're on a trial. We will give you some of our time to just sit with you, kind of assess where you're at in the whole big picture of trading, and talk about where you want to get to from here. And then we'll see if we can't put together a plan to help you get from where you are to where you want to be. All right, Michael's going to come right now and do that recap. As soon as he's finished, I will be back with our good word for the day. We'll take a look at the Concierge Trade Alerts from overnight. We'll talk to David from pagetrader.com and get those forecasts from the Edge. We'll also talk to Garrett if he has time to pop in and sit with us for a bit today. And, of course, there's a big meeting tonight, 6 p.m. Eastern. I say big. Well, it's medium-sized, I guess. Normal. It shouldn't last more than 15-20 minutes. It's sort of like a huddle before the game, right? We're going to all come together, and any final questions that you have about the one trade a day, we'll get those answered for you, get them cleared up. And if you have not gotten all your ducks lined up, your account's not open, or you haven't sent in your documents or whatever, relax, okay? Just relax. The meter doesn't start running for you until we actually start sending you your one trade a day or however many markets that you've signed up for. So just relax, okay? Patience. The markets will be here tomorrow and the day after and the day after. They'll be here till he, and that's capital H, till he comes back, okay? So the last thing in the world you want to do is get in a hurry. Slow and steady. That's how we want to do it. So don't rush yourself. Don't get hectic or frantic or any of that. Again, the meter doesn't start running for you until everything's in order and we're actually sending you your alerts or you're coming to the password protected page to get them. And that's it. That's all I got. Michael, take it away.
All right. I'm ready.
Do the deal.
Okay. Well, here, let's go over here, and we'll start with this. And I'm going to hit the record button. All right. Good afternoon, everyone. Happy November. Today is 11/2/2015. It's my sister Debbie's 50th birthday. Happy birthday, Deb. Anyway, today, if you want to take the free trial, just go here to the homepage at CFRN.net. In the right-hand column where it says register for a free trial, put in your name, put in your email, click register for a free trial. When you do that, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, you're not going to get a free trial. That's just the way that it works, because we don't know until you click that confirmation link that you took the free trial. November. Starting off rough in November. We had our first down day since May. Our first red day, I should say. Our first red day since May. It was bound to happen again. But here we are. Our results. Today, the truth about trading. We started off with -4. -4 in soybeans, -13 in the Russell, -4 in crude, +2 in gold. Okay? And we took a total of 20 trades. I can barely see that. We took a total of 20 trades. On the day, we're down $190 a contract. That's over one trading day. So our average daily profit is -190. If you apply an $8 commission to every trade we've taken, you would have a net profit of -350. If you applied a $5 commission to every trade we've taken, you'd have a net profit of -290. Okay? Last month, we finished up last month. We finished up last month with $7,395. That's over 22 trading days, averaging $336 a day. We'll get there this month. We'll get there. We just can't get there right now. On the month, we were up On the year, we're up $55,137.50. That's over 205 trading days, averaging $268 a day. Okay, $268 per day. All right, that's the spreadsheet so far this month. Now, let's just go through the trades. All right, in the gold. Gold is the only place where we had anything positive today. All right, here. Let's go back here. Our first trade right here on gold, we missed. Then the next trade right here, we got 2 ticks profit. This trade over here, we had a break even. Okay, 2 ticks profit here and a break even here. And that was it. Then gold just went flat. There was very little follow through today. All right, we're +2 on the gold. On the Russell, I didn't feel like we missed a whole bunch here, honestly. The first trade we took right here stopped us out, went down into the weekly trading zone. And then we had a break even here, a break even there. We got a little profit on this one, on the Russell. 3 ticks profit, got us back to -5. Stopped out again pretty much to the tick, put us back to -13. Another break-even trade, and that was it. And we didn't miss anything with the Russell today. You know, during the break, there was one trade right here, and one trade right here. This would have been a break-even trade, and this probably would have been a break-even trade too. Okay, just didn't have a lot of opportunity today. Crude oil, let's see. In crude, we ended with -3 ticks. Our first trade of the day, we were positive right here. We got 1 tick profit on that one. Then we got 8 ticks profit here, putting us at +9. Stopped out on that one, putting us back down to +1. Got 1 tick here, putting us at +2. We missed a trade right there. That probably would have given us our goal for the day, but maybe not. Had a break even there, a break even there, and a stop out there. This stop out right here put us back to -6. Break even there. +1 on that one put us to -5. +2 on that one put us to -3. And I don't see any places where we missed any trades here. So we were -3 on the day on crude. Okay. In soybeans, we stopped out on this original trade right here, and then we just about got it back here. I was in this trade forever, and we finally ended up taking 4 ticks profit on it. I had moved my stop to +4. It was 1 tick away from hitting my goal, which was 8 ticks, and it just wouldn't take it out while I was in it. But eventually it did, and it gave another short trade right here that you would be in right now. Okay. On the ES, we had just a single break-even trade there on the ES. You can't really see it. We had just a single break-even trade on the ES. And that was it. That was it, guys. With that, I am going to get back over here to my spreadsheet. Okay. Let me bring up the questions. Here we go. I had a down day. It's my first down day since May. My first red day since May. But it is what it is. Yeah, we're going to green because Christmas is coming. The trades this year. 35,392.50 is the net profit with a $5 commission so far. Thank you for doing that, John. Of course, you would have to subtract $290 from that now. All right. So on the day, we were -4 on beans, -13 on the Russell, -3 on crude, +2 on gold. Okay, that got us to -190, and that's where we stand on the month. All right. Now again, if you have not taken a free trial with us, then you just need to go here to our home page and in the right-hand column where it says register for a free trial, put in your name, put in your email, click register for a free trial. Oh, that was including today. Okay, thank you. Click register for a free trial. When you do that, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, you're not going to get a free trial. That's it. Simple as that. All right, and that's all I got, guys. With that, I'm going to send it back out to Phoenix. At least shut off the recording. Phoenix, if you're available, I am prepared to send it back out to you. Phoenix? Hello, Phoenix? I'm guessing Phoenix is not available. I gotta make a phone call really fast. Crap. Alright. Well, that would have been the spot right there. Okay. I was hoping that the markets were going to loosen up at the end of the live trading room, you know, when the European markets closed, but they didn't really. They really didn't give much. All right. So right here on the Russell, that would have been the trend line. There would have been a long trade right in there. Okay, it would have been a momentum long trade, so you probably would have gotten a break even on that. The soybeans right here, this down close below the trend line is where you would have gotten short. The short spot would have been 81 1/4. And so far it's dropped 4 ticks. The ES in a weekly trading zone. Crude oil, we need to pull back. We need to pull back. And nothing on the gold. I hadn't looked at the bonds all morning. Now I can see it's just as well. Just as well. And let's see. I had that area, that range last week on there. Remember I had put that range on at one point last week, right here. And it's just sticking to these levels right here. Now the range this week, I'll just bring it down. It's the same, just about the same size range. It's just a mess.
All right, I'm back.
Okay.
I was just going to get some coffee,
mess.
but I can get it when David comes on.
Okay.
Good.
You're good. Hey, Mike Reed's in the house.
Hey, what's up, Mike? All right, let me grab the charts back.
Okay. All right. And the recap of the recap was we didn't get our goal today.
Yeah, I heard. That happens.
It does.
Rarely.
Every couple of months.
Rarely, but
Yeah.
I mean, it happens. So.
It does. The truth about trading.
That is the truth. Okay. All right, Mike.
All right.
I know you got to make that phone call, so let me just jump right into our good word for the day. And after that, we're going to talk to Mike Reed. Then we'll talk to David from Page Trader. And then we will talk to Garrett, if he's able to get in today. And, of course, we'll cover the Concierge Trade Alerts from last night, which, well, let's just say you'll want to stick around for those. All right. Good word for the day. Here we go. Signs of the Times. Remember that song? The sign said, long hair and freaky people need not apply. Yeah, that's me. Matthew 24:3. Now, as he sat on the Mount of Olives, the disciples came to him privately, saying, "Tell us, when will these things be? And what will be the sign of your coming and of the end of the age?" Everybody wants to know. And men have made a practice and a profession even out of predicting. Well, let's see how this works out. When the disciples came to Jesus and asked him, "What will be the sign of your coming and of the end of the age?" he told them things were going to get worse before they got better. Then he added these words, "See to it that you are not alarmed. Such things must happen, but the end is still to come." That's Matthew 24:6. Now, the word alarmed is one that Jesus used only on this occasion. It means to wail, to cry aloud. In essence, what he was saying is this: don't fall apart when bad things happen. For the next few days, we're going to look at some of the signs that Jesus said would herald his return. Spiritual deception. Watch out. Now, this is Jesus speaking. If you have a red letter edition, this is going to be in red. Jesus answered, "Watch out that no one deceives you, for many will come in my name, claiming, 'I am the Messiah,' and will deceive many." Notice there will be many deceived as well as many deceivers. Jesus also said, "They'll come in my name," masquerading as ministers of God and claiming special status and superior spirituality. They'll boast of insider information and adorn their teachings with phrases like, God told me, implying they have access to information the common people like you don't have. Have you ever had somebody hand you their business card, and instead of where it might say president or vice president or CEO, it says prophet? Just asking. I know that rubbed somebody wrong, but I'm sorry. It's just the truth about life. Friend, don't be misled. That's all I'm saying. Okay? Not saying there aren't prophets, real prophets, true prophets. There are. But in the last days, Jesus said, there will be many deceivers, and there will be many who are deceived. And they won't come with horns and a pitchfork. No, they'll come in the name of God. They'll come as angels of light. So this is why you need the power of the Holy Spirit to give you spiritual discernment so that you can understand who's who in the kingdom of God. There's a scripture that says, my sheep know my voice. Meaning my children. You and I should know his voice. We should be able to discern between what is of God and what is not of God. Jesus also warned in Matthew 24:24, false messiahs and false prophets will appear and perform great signs and wonders to deceive, if possible, even the elect. Now, I want you to be especially careful in the house of God, in church, because that's one of the places where you might often see the greatest source of trickery, okay? Again, not speaking ill against any particular man of God. I'm speaking in generalities here. I'm saying be careful, okay? Because there's people out there who, just as those illusionists in Vegas and the magicians, I'm trying to think the two guys, the big guy and the little guy, I mean, they're really good at making stuff just vanish, you know. If they can learn that craft, and they don't claim it's of God, they just claim that they're illusionists, that they can trick the human eye, right? And they do it quite well. And we pay good money, and that's okay, because we know that we're paying to see an illusion. It's when the illusion is paraded out as something other than illusion, that's when we have a problem. Multitudes and miracles. When you see them, be careful. Satan can counterfeit both. Be doctrinally diligent. Focus on one question. Is this person pointing listeners to the real biblical Jesus? There's only room for one name on the marquee, and that is his, with a capital H. And that's our good word, with a capital W, for the day. Well, I hear our friend Mike Reed's in the house. Mike Reed, come on down.
How do I?
Hey, how are you, man? Good to hear from you.
I'm good. I'm doing okay.
I was interested by your message the other day. I had watched that TV show, The Prophet, and I mentioned the Amish who did the woodworking, and I think it's Leah. I had his name the other day, but anyway, have you watched that show on CNBC?
The Prophet? Yeah.
Uh-huh. Okay.
Yeah.
Did you see the episode where the guy made, the guy had a business making those little miniature baseball bats, but he used
Okay.
the Amish to actually do the woodworking to create the bats.
Yeah.
Did you see that
Okay.
episode?
Was that the first one of the year? I didn't see this.
You know, I don't know, because when I'm and it's late afternoon here, my time, early evening. I'm at my desk, and I have a little small TV that I turn on just kind of for some background noise. And so I'm usually getting hit with a rerun of The Prophet or one of those other CNBC reruns. So I don't know if it was the first of the season, but this guy, he had a deal with the MLB, Major League
MLB?
Baseball,
Uh-huh.
to put these bats in all the little gift shops and the different. Actually, it turns out he fibbed. He actually didn't have a deal for every stadium. He kind of did, kind of didn't. But anyway, what made his deal
I may have
unique?
seen this one.
What made his deal unique was that once the Amish turned, it's what they call when they put it on a lathe, and when the Amish would actually create the bat, and then he would bring them by the truckload back to his place of business, and he had customized some kind of printer to actually then they would run these things through there, and it was like an inkjet printer, I guess, and it would paint them different colors, and it would put the different teams' logos on them. It was pretty interesting. But his business after all these years was failing. His father originally had a business that created handles for tools, and so the Amish would turn those handles, and then the dad would somehow bring them back to his shop and I guess put the tool together and make it a hammer or whatever else. And so you said in your message to me that the Amish folks had framed your house. Is that correct?
Yeah, they're good with wood.
Uh-huh. Then you said something else about taxi driving too, didn't you?
I had a cousin who over in Ohio, and I have a friend here in town who just started driving for the Amish because they go by horse and buggy.
Right.
Or they drive, or they have to catch a ride to come to town or go to work. A lot of them, that's what they do. That's why they need drivers to take them into to their job to go frame a house. A lot of them do that kind of work around here. They're not too far outside the town here, about 50 miles south from where I'm at. There's a big Amish community, and it kind of trickles up to about, you'll see them about 3 to 5 miles within the south side of where I live at times.
So if they have to travel farther than the horse and buggy will take them, then while they can't own or drive cars, it's okay, it's acceptable to rent or get a taxi.
Right.
Right. Okay.
Right.
And now, I don't know if we've ever talked about this before. I didn't realize you were entrenched there in Amish country, but that crazy show that's on some other channel, the Amish Mafia. Have you ever seen that show?
I haven't. No, I haven't seen it.
That's a riot, man. I mean, I'm sure much of it is just entertainment, and the directors. There's an element of truth. That much I get, and that they keep to themselves. They like to take care of their own problems. Us, the regular folks, we're called the English. That's how they refer to us, at least on that show, the English. And so
they don't pay taxes.
Oh, they don't
pay taxes.
Oh, I didn't know that. Wow, and they don't get in trouble because of it, or
no? It's
they don't report the income. Is that how?
It's the religious. Some religious.
Religious.
And so, and then they have a big pool of money for family in the hospitals. You'll see.
Okay.
You go to a hospital and there's an Amish family member in there. There'll be about 20 family members up there to see him, but it seems like, but it's all paid out of a family fund.
Like a general fund. Okay. And this young man, or he's not so young, but this younger man, who was like the head of it's like the sheriff without a badge. It's whenever if somebody stole somebody's horse or did somebody wrong or some guy, you know, beat his wife or slapped her around or something, you would go to this guy and him and his henchmen, they would go out and, you know, take care of business. Now this guy drove a Cadillac. So he's not exactly a practicing Amish. He was part of the community, and so again, how much of it's fiction and how much of it's, you know. But again, I'm sure there's some truth. But anyway, well, and so I knew about Rumspringa, and they go when they're young and they spend like a year out in the world and make the decision if they want to come back or not. And the show I saw about that says that, I don't know, something like 70% of them choose to come back home and live the Amish lifestyle. But from what you said in your message the other day, it's not a Puritan type community that even though they're like a deeply religious people, there's some shenanigans going on, right?
Yeah, when they're away from the homestead.
Okay.
They're not well.
Yeah, you can't be public because you get shunned, and if you're shunned, well, then you can't. Nobody will do business with you. That's bad. Speaking of business, what do you think about these markets?
They finally broke above the 88.5 area here, which we're at or close to here.
Mm-hmm.
The top August 18th, and then on the 19th they turned down, and then 2 days later they were 211 points lower. So right back up to a breakdown area, very close to it here. They have to look at the cash. It won't show up on the futures, I don't believe. There was a high on when they made that top, then they turned down right before the big nosedive. That was the day when the VIX dropped down to like 10.41 or some ridiculous figure, and they reversed early on a higher open, and that started it.
Here's the daily chart. All right, so you're talking about this high right here, August 18th.
All right.
Okay.
There we go.
Oh, boy, look at that. Support and resistance, not broken. Okay. So we got to pull back. Now we're going to take another run at it and see what happens. Now, people always say, well, how long is that going to hold as support? Or how long will that hold as resistance? My answer is always the same, until it doesn't, you know. Sometimes it can take one hit, sometimes it can take two, and sometimes, you know, it'll hold to the point that it turns price and heads in the other direction. You have any rules of the road or that you want to share with the audience in regards to support and resistance, and maybe some tips on how they know if it's going to hold, or heads up maybe if it's going to hold or not hold? Or
a heads up would be simple, like at that last high where you had a run up and then a narrow range today at a high. That's kind of a heads up. That happens intraday also with what I call stalls. Some sort of pattern like that, or a pullback, a little pullback from here, and then another test that falls a little shy. Kind of makes a 1, 2, 3 top pattern, something like that. But we'll see how the day ends. They end up.
Yeah, I mean, now this. Okay, now this is a daily. So, all right, so we know. Let me just draw put a little guy right across here like that. And now let's switch this down to an hourly. Let's see if that holds. It did. Okay, so now, guys, we just went from a daily chart. I won't go all the way back to the 18th of August, but you all saw it. So we came up into that area. Okay, we can see that it's a much smaller area. In fact, what was the swing high price, Mike, on the 18th? You got that right in front of you?
The swing high price on that. Wait, 1 second, right?
Hang on, I can scoot back over there and get it. Yeah, I got it right here. The swing high was 20. We'll just call it 2095. Okay.
I think it was. Yeah.
Back over here. 2095. Okay. Right there. So we've got a double top there, going all the way back to August the 18th. So we made this run up, tagged it, and then we started building legs to the downside. Leg, retrace, leg. But we didn't, on this pullback, we should have got another leg if we were going to continue down, but we didn't. We turned, and so now looks like we want to build legs to the upside. So what you're saying that you would watch for is a failure here, a failure to go back up, test this, and to actually look for the market to start on this. Boom. Boom. Building some legs to the downside. Yeah. Hey, I know you got to run, but let me just bring David in real quick because I know he'll want to say hi to you. And we'll skip the station identification. Guys, you're listening to CFRN. We're going to bring on David right now from pagetrader.com.
I thank the Lord for love like ours that grows ever stronger. And I always will be true. I know you feel that same.
Good morning, Dwayne.
Hey, David. Good morning. Welcome to the show.
Thank you, and good morning, Mike Reed.
Big show.
Good morning,
Trade
David. How are you?
stalker. Good. Are you stalking the trades?
Been stalking trades, David.
You are?
And,
Good.
well, yeah, trend up day going here.
Mm-hmm.
Anyhow,
Yeah.
after breaking out.
Trade stalker. One-way ticket back.
Come on over.
All right. So what else do you think, Mike? I mean, we had a Fed meeting last week. We got no rate increase. We got one more meeting in December. David doesn't think it's highly likely that they would anybody would want to raise rates during an election year. I tend to agree with him on that. What do you think?
I don't think they will, but
What do you think about
they
December?
should.
Do you think December we'll see anything?
Boy, I'd be surprised, but that's a possibility. I mean, they have to do it sooner or later.
Well, I don't know. Do they?
Well, sooner or
we keep
later.
saying
Yeah.
sooner or later they got to do it, but I
Yeah.
mean, what if they
I
don't?
know.
Well, I mean, just what if they
Well,
don't?
That's a historic thing going here that never. Boy, yeah. I don't know how we could keep on going forever doing, but
Well, our federal deficit keeps
Yeah.
on going forever, so maybe we...
we could go to negative. I don't know. You know. Yeah.
Now I heard talk of that. I heard talk of them going negative. Now, who benefits from that? If the thing I read last week and that I encouraged everyone to listen to, from the guy who used to work at the Fed, that the way they're going to make this $3 trillion they created vanish, so to speak, is they're going to incentivize, they're going to pay banks an additional little bonus to not lend money, to just sit on it and let it sleep. Now, taking rates negative, if you're not going to loan the money anyway, I mean, none of this makes any sense.
Yeah.
15 years into this radio program, 10 years into this radio program, I figured out none of this makes any sense. Okay.
Well, I think if I don't know this because I don't think I've been alive when this has happened, but I am imagining that if a bank was paying negative interest, that would mean essentially that you would have to pay to have your money in their account, because in the same way that when interest rates, I mean, we actually, for a while there, while the housing market crashed and bonds and all that, if you went to the bank and bought a 3-year bond or a 3-month bond, it actually cost you money to do that. You didn't make money at the end of 3 months. You actually lost money. So I think the banks would be charging money for depositors to keep their money in the bank.
Well, I think there's a lot of accounts now that charge you
Well,
money.
that's for
Yeah.
various reasons. That's for various
Yeah.
other reasons. I'm just saying, just a regular depository account, even somebody who might be a good customer, they're going to charge you rather than pay you if interest rates are negative. And I think some European banks possibly have interest rates that are now negative. You know,
Yeah, and you're better off under the mat with it under the mattress.
at that point, yeah,
Yeah.
you were probably, unless you're just saying, well, I want it protected. It's in a bank. It's being protected.
Not necessarily.
Yeah, right. Not
Yeah.
necessarily. I mean, back in the day, man, they would throw toasters at you and all kinds of stuff to come open an account.
Yeah.
But now you got to pay. That's
Hey guys, sorry, but I got hop
Okay,
here,
buddy.
so.
Well, listen,
Okay.
it
You have a
was
great
sure
week.
good. Sure good to talk with you, and thanks for bringing us up to date on our Amish history. And we'll talk to you, I hope, later in the week.
Okay, thanks.
Guys,
I
go
also-
visit Mike at
See you, Mike.
tradestalker.com. He's got some great information on his site. He's got free videos, articles. You can take his free trial indefinitely. Tradestalker.com. Thanks, Mike.
Thank you, Dwayne. Bye, dude.
Hey, bye, Mike. Just want to let everybody know I got my, did I mention this last week? I got my renewal thing for the healthcare.
Oh, you
And-
did. Tell us
Yeah.
again.
Well, I started out before Obamacare at $180 a month. Was my the kind of package I had was sort of the, catastrophic type of thing, like an $8,000, what do you call it, deductible. So
Right.
if something really, I'll pay everything under that. If something really bad happens to me, then the insurance can step in. I tried to keep that program and through the Obamacare, and it went up from 180 to 400, and now this time it's now been raised another basically $100. It's 497. So
Wow.
if you take 180, so my health care has gone up, like 260% or something.
I've got my
497
package,
divided
David.
by 180.
Was it like a legal
270.
sized? Was it
Yeah.
like a legal sized envelope that came?
Yeah, and it's very well. I mean, it depends on who your provider is and stuff like that. I don't
I'm
know
with
if you're
United
with Anthem.
Healthcare. I'm opening mine right now. I haven't opened it yet.
Yeah, so it'll have a cover page, and it'll say some of your things have changed, and yours will probably have gone up.
Drum roll, please. Okay.
I wonder if anyone in the audience has gotten their $2,500 a year savings that we were promised,
Okay, so it's not on the cover page.
or if you can see your doctor, keep your doctor.
Plan changes. Deductible for Connecticut residents. Okay, all other states, no change.
Okay.
Oh, check this out. If it says here, plan change, deductible for Connecticut residents. In 2015, it was $10,000 for out of network, $5,000 in network. This year it went up $1,000, $11,000 out of network, but that doesn't affect me. So let's get to the part. Let's see. Coinsurance. Okay, 2015, you pay 20% after the deductible. In 2016, you pay 30% after the deductible.
So they just keep taking more from you one way or the other. It's costing you more every time.
Out of pocket maximum. Last year, it was $13,200 for the family, $6,600 per person. And in 2016, it's $13,700. Now that doesn't. If I'm paying $1,200 a month, okay, I guess that's 14,000. Okay, so it's 14,000. How did I come up? Oh, well, yeah, you pay 13. Let's see. Out of pocket maximum. 13,000. Then you add the 5,000 deductible on top of that. Is that how that works?
I don't know. I ask your doctor or pharmacist.
Yeah. Okay. Copay. $50 with a 4-visit limit. A specialist is $100.
Yeah, it
That
is
was last
5,000
year.
over that.
That was
It is
la-
5,000
yeah.
over that, Dwayne, because
Okay.
what you're doing is you're paying your insurance now.
Mm-hmm.
That insurance has a deductible attached to it, and that's your $5,000 deductible.
So
So
13
you're
and
paying
5
$13,000 a year. Yeah, you're paying $18,000
to get a
before
free
you
Band-Aid.
get it.
Yeah.
To get lousy health care. Now, I have friends who are, in fact, my business partner self-insures himself. He basically is taking that. I've considered that, and now that it's getting up to higher rates, and that's something for people to seriously consider. But there is a potential fine involved in that. It depends on if you're a business. There's a bunch of rules involved in it, but he does self-insure, and that means that he puts a certain amount of money away each month towards, instead of just giving it to these people, it accrues to him. In other words, he's taking the risk on himself. He's the insurance company. So if he pays himself and he doesn't get sick for a long, long time, he's accumulated a lot of money, and he's good to go. As an example, I mean, you're not going to do this, but I'm just showing how fast it adds up. So you've got you've got a $13,000 a year expense for health care with 2 people and your kids or whoever's in it. And
Well, my kids are covered by the state because of the adoption.
okay, so in 5 years, you've got $65,000 that you've handed over to someone, and you don't have anything to show for it, but except that you were supposedly protected during that period of time. And in 10 years, it's $130,000 and so on. It adds up, and so people seriously consider self-insuring if they have whatever the income or the savings or whatever it is to help them do that. And so that's something people can look into as well, which is not a bad idea, and it has some responsibility to it. Or at the very if something really, really bad happens, a couple of months in a hospital, is enough to, add to the federal deficit. I mean, you can really run up a tab in a hospital. Ain't no two ways about it.
Now,
So
check this out. Required notification, important. United Healthcare, life insurance company, I guess that's just the name of, is continuing to offer your health coverage for next year. Some plan details may have changed. Unless you take action by November 22nd, you will be automatically enrolled to continue this coverage next year, but the plan won't allow you to receive financial assistance to lower your monthly premium, co-payment, co-insurance, and deductible based on
right,
income.
that's only if, that doesn't mean that if you sign up now that you won't get other benefits that you would have gotten. It means that if you're in a position where you would normally have those kinds of things coming to you, which would mean that you maybe don't have a certain income level or something like that, I don't think you're missing out on the ability to reduce your rate.
No, they're saying because of
qualify
income
for reduced rates.
Yeah, they're saying because of income, I don't qualify for any of that. So, yes, thank God I'm happy to have a nice income, but I don't know. Doesn't seem right. Well, it's not right. It doesn't seem right. Your new premium starts on January 1, 2016. Your new monthly premium will be $1,088.37. If your premium shows TBD, well, it doesn't. So that's for just my wife and I. Now that's whatever, $13,000 and change a year. Since we've been married 30 years, together we've not spent $13,000 on medical care. I mean, we've been blessed and we're thankful. We've had good health, no surgeries, no kind of things that typically that a lot of people encounter and can and are incredibly expensive. But I mean, now that we have to pay for this insurance, there's no way we could ever afford. Before we could afford to go to the doctor. You know what I'm saying? But now that we have this insurance, now that we've had this shoved down our throat, now we can't afford to go to the doctor because we have to save our money up to pay the premium.
Right.
How ridiculous is? I mean, I'm not the sharpest tool in the shed, but I mean, I can see the holes in this. It's just stupid.
Well, yeah, most people were very happy with their insurance prior to this. And in order to fix it for the 2%, they wrecked it for the 98%. And people across the country have complained about the quality of the health care has gone down. I mean, everything has turned, and of course the people that wrote the bill, they have a completely different health care plan, don't they?
Yeah. Now let me ask you this. In other countries that have, I guess the term is socialized medicine. Is that the right term?
Yeah.
What they
like
have
Canada.
in Canada or Europe, places like that. I don't know about Australia. I just don't know. But Europe and Canada have socialized medicine. Now, do those citizens there pay these exorbitant premiums? Or?
No, what they do, it's just how do you want to label it? We're paying a premium. They're paying dramatically higher taxes.
Okay,
so
that's
you. How they get that money. It's one way or the other. But when the private sector runs the insurance companies, people complain bitterly about the insurance companies and how much profits they make and so on. But look what happens. I mean, just remind your friends that the reason their insurance premiums went up is because insurance companies who were making these supposedly obscene profits actually cost less money as a whole system than this government-run system does, because everyone universally, except for people, rare people, few people had theirs go down slightly, but the majority of those that have them go down are people who are getting it because they can't afford to pay, and therefore they get it for free. But everyone else had theirs go up. So all of the complaints about insurance companies ring a little bit hollow now, don't they?
Yeah.
Because it used to be a lot less when insurance companies, the private industry, was giving you better insurance, better doctors for less money. Now the arguments about insurance companies fall flat on their face, being, costing so much money because it's way more expensive now. Mine is up 260%, and I've been healthy my whole life. I don't have any history of any of that, using insurance and so on. And it just goes to show that we didn't know how good we had it until these idiots got a hold of our insurance and our medical.
And when the discussion comes up at some kind of gathering, whether I'm at a family gathering, a birthday party or something, or at some kind of church gathering, and the topic comes up, and I voice my complaints, people around me say stuff like, I don't know what you're complaining about. I only pay $125 a month, or I only pay $175
Nobody's
a
paying
month.
$125 a month. There aren't any people that are paying $125.
Well, no, actually.
There's no plan. There's no plan for $125. If you look at the 4 plans, there's no $125 plan per month. It's not in there.
The people who couldn't afford health insurance before and are
Those
getting
people,
subsidized
the people,
care.
That's
what
a
I'm
different
talking.
story.
I know, but that's what I'm referring to, David. Is there's people who look at me like I'm stupid because I'm paying $1,300 and they're only paying $125. They don't understand the great divide, and I don't, and they tend to be, well, whatever. I don't want to get into all that, but they go, well, you're being taken to the cleaners. Well, you've got a bad insurance agent. I go, no, you don't understand. It's the law. Our president did this. No, he did not. Our president gave us affordable health care. See, like I said, I'm only paying $125 a month, and I want to throttle him and go, yeah, and because of you, I'm paying $1,300 a month, but I can't because I have to love everyone and respect them. I mean, I want everybody to have health care. I don't want anybody to be sick and not be able to go to a doctor. That's not,
President Obama is your health care agent now. So there you are. So there's got to be some other way. It's an interesting problem to try to solve one way or the other. And we all have to look at it and decide how much, how how solvable it is. I just want to, though, remind those of you that are on the left and those of you that have complained so bitterly about insurance companies that now for the majority of people across the nation, those that are not being fully subsidized, all of this is way more expensive than it was before. So I guess those insurance companies weren't making so much money, or if they were, they had a way of making that money while providing quality health care. Sure, there were some problems. There's no system that is completely free of problems. But this problem they solved by wrecking it for 98% of the people and solving it for 2%. And the 2% are the ones that we all agree that whoever they are, that they deserve to be not have to worry that they wouldn't be taken care of, and I think we're all willing to pay in for that. But along with that, under the guise of that, we got this complete crap healthcare system. And wait till you have to go use your doctor, because he isn't there anymore. Now the whole system has changed. So it's not only you're paying a lot more, but you're getting a lot less quality. And that's what the government's all about. They don't do private sector quality work. They don't have to do that quality of work, and therefore they don't. That's why the private sector is much, much better at this stuff than the government is. The government's very good at some things. It's usually bad at just about everything, but there's a few things it's good at, and it certainly is necessary. But, the fact of a government, no one would argue with that.
Right. No,
but,
we want safe roads. We want safe food,
military,
safe meat.
We want food, we want the regulations to make sure, certain industries are practicing the things they should do, and, but beyond that, this is one of the biggest boondoggles that has happened in history, even though wrapped in it, it's doing a good thing for some people. It's allowing some people who couldn't afford health care to get it. We could have done that before. So when people tell you insurance companies are ripping everybody off, I'd take another look at that. Go take another look at where we were before and where we are now, and tell me that was a big ripoff. Because what the ripoff is what you're having now.
Yep.
That's the big ripoff. No.
That's the ripper.
There it is. So, all right. So we've got some interesting things. We're in November. We got through the month of October without any crash. Everybody, thinks in terms of October being the month for crashes, and I think we can say that October. We really can't look at the charts and say October had a big crash. If you start from September 29th or September 30th, all October's done was basically nearly a straight up. I mean, if you take a look at a weekly chart, we've been going up since October began. Week after week has been higher closes, every single week. So there has been no crash in October, and this goes back, of course, to the crash of 1987, and that crash set into motion this fear that October and so on would have a crash. And certainly we do have big volatile moves, many times declines, in the latter part of the year. So, but we got through October without it is all I'm really commenting on. So, and we're still very strong, today. We're having a very good day in the markets today. They're up $15 on the S&P, and we're testing some relatively important levels. It's very interesting. So we have some ideas of what we think the market would normally do here. I mentioned on your program on Friday that Monday, today, the market would, even if it wanted to go higher, it would first go lower, and they did. They went down to 64 today, and now we're all the way up at 2089. So we've got a nice, solid, pretty much kind of like what Mike Reed said, a kind of a trend day up going underway here. And we're just going to have to wait to see a little more evidence of what the market is going to be capable of doing here. One of my biggest secrets is I don't act unless I really know what I'm doing. So if I don't have a good idea, I just wait, and I wait for more evidence to show. And that's what we're doing right now to see how the S&P and the Dow and the other indices treat this. One thing I would be interested in possibly doing is if the market starts to show some signs, certain signs of weakness here, I wouldn't be against trading to the short side a little bit later today or later in the day.
Okay.
But at this point, I don't have enough evidence to take advantage of that yet. I want to see more before we do it. And it wouldn't be a huge move down for us. It would just be an intraday trade. So
yeah, that's
we'll
what
see.
Mike was talking about, is that if we, like on this little rally up, and I'm on an hourly chart, but we came up and tagged the high that was put in back on August 18th. And so we've come up and we hit that on Friday, it was the 30th. And so today we got really close. And so what he's looking for is a failure here. And to different people, a failure would mean different things, or you've got some indicator set, there's some methodology or something that tells you to start looking for a short trade. I'm with you in that right now I don't have enough evidence to tell me to get short. I mean, I can put a price out there that I would get short at if price starts to decline, but it's not a trade yet. I mean, I know what the trade will be when it comes around, but it's just not there yet. And we've got 32 minutes left in this hour. Let's see what's in the chat box. Let's see what kind of questions we have or comments. Mike R. says Canada also has free college, but they pay 51% tax.
Yeah,
that is
you
what
have to
I
think
was told,
about that.
he said.
Yeah, you have to think about that. Listen, Canada's a really beautiful place and a very sort of genteel country, overall, and people seem very happy living there. They've agreed to live under those sets of conditions. But when you live in a country like that, you're agreeing to live with the idea that there is a government there that's going to take care of you, because you're giving half of your income away to the government. Whatever your work provides for you, you're giving half of it away for the betterment of, to pay for your health care, to pay for your college or whatever it is, and to pay for whatever other programs there are. And if you can comfortably live under those conditions, it may make sense for some people. But, we are headed to a system like that, potentially. I think a lot of people would want to see America turn into that. The problem is that, of course, that's not how America got to where we are. We didn't get here on socialized education, socialized medicine, and of course that never ends there. That's just the beginning point for more, nutty stuff. Before you know it, you're like Europe. And that, even while Europe is failing, this administration is using Europe as a model for us to go after. They don't view their failures as a failure because of the system. It's not systemic. It's some other reason. That's why I say that they're smoking, they're high on their own neurotoxins. I mean, they cannot see anything other than their ideology. They can't see any reality outside of that. That's why the decision-making process is so universally derided about this administration, that the kinds of decisions that they make clearly indicate that they're not seeing clearly, because ordinarily when you see something, you wouldn't take the actions or non-actions that this administration chooses to do. It's a very peculiar set of conditions that we're under here, and I've already decided and figured out that the Democrats are not going to win this election. So I know it is going to be a Republican. I don't know who it is going to be. And my belief is that, we certainly have a shot for a Donald Trump. That's a possibility. We certainly have a shot for Carson. But the kind of horse that might be coming up would be Marco Rubio, who would have a real potential here. I hope so. And I'm just laying out that this is what I think is likely, based on certain sort of conditions that I think are here, that it's a little difficult to know, and this is not my expertise, but I certainly am leaning towards that way, and I'm trying to make sure that that's not just a desire of mine, but it actually is something that I think is likely to happen. I think it's going to be difficult for Hillary Clinton to win. She's the only candidate. You have to like her. I mean, the other guy, Bernie, with his socialism. But we'll see. either way, I hope we get somebody in there, even if it is the other side, that has some common sense. And neither of them Hillary, as much as some people might like her, is literally nothing but a political hack. I mean, she seriously has made so many bad decisions along the way here, and she's so untruthful with her answers and stuff. I just don't understand why anybody would, want her to get in there and muck up the system again. And of course, Bernie is another avowed socialist, and he wants to completely fundamentally change the United States of America with those programs. And I just see a lot more passion for putting America right again on the right, even if they have their problems. And they do. Both parties have their problems. There's no question about it. But
Yeah.
America is we won't be arguing over parties. We'll be arguing over who gets to eat the scraps pretty soon, unless somebody takes care of the deficit. The deficit's just turned into a meaningless number to people anymore. It just doesn't seem to mean anything to anybody. We're inching in on a $20 trillion. When this guy leaves the office, it's going to be $20 trillion.
Yeah, I mean, it's like monopoly money. It has no. It's tied to.
In reality, it's real money.
Oh, I
as
know.
We know.
Yeah.
And it actually has to be paid, and government doesn't make that payment.
Yeah.
It has to come from individuals. So the tax rates are going to go up through the roof, and that's how they're going to collect that money. So that just means that your efforts, your work, your time and energy is going to be taxed more heavily because of these spending habits. Okay. We don't have much to show for it. It'd be one thing if we said, yeah, we did the 20 trillion, but we have this to show for it. Everyone gets an education now. You would have thought to go from 7 trillion up to 20, that you would have thought, well, at that point, everybody would get a free education.
Yeah.
From 7 to 20, you would think, well, everybody would have free medicine. From 7 trillion to 20 trillion, you think everybody would be living in Shangri-La. But not only is that not the case, it's gotten worse. That extra, $13 trillion that we spent, things are actually worse. So I agree that if you measure the job performance and so on like that our job has picked up, but it's anemic growth. Our growth in the economy is at 2% or lower at best. And you would think with all that money we would have something to show for it, but the truth is it's just nearly wasted money on really bad policy and really bad management of the Treasury. So
hey,
there you are.
Guys, we'll go to the bonds here just a second. I wanted to share a comment that Tim put in his book, Rules for Radicals. Sal Alinsky lists 8 levels of control that must be obtained before you're able to create a socialistic state. Number 1 is healthcare. Control healthcare, and you control the people, is his comment.
Right, and stop right there. That's the first thing our president did. That was the whole linchpin of his presidency, is to get onto that. And he wants to go to the one-payer system. This system is sort of designed to fail, and the one that we're on right now, and hopefully it ends up, he's a chess player. All he is political. He's just playing political chess. We'll do this, that'll get these people to do that, then we'll do this, and then this will happen, and that's our stuff. That's what he's doing. It's a game of political chess.
It's called a long con.
Yeah, exactly. Go ahead.
I wanted that to sink in on everybody. Now, might you enlighten everyone, who is Sal Alinsky?
Well, he's a radical that wrote a book about it. He's a 60s and 50s radical, and he is really looked up to because...
Isn't he a mentor of our president?
Yeah, he's a mentor of our president. The president looked up to him, and the president was...
Used to hang out in his living room or something?
Yeah, and somewhere along the line, these people, like Alinsky and others, felt that there's something inherently wrong with capitalism, even though they're living off of it, selling books off of it. They're doing, this is the contradiction that they never see. They're enjoying the fruits of capitalism, and they're using that to complain about capitalism and to try to change everything into socialism. They decided that that's better for you and I. They made that decision, that you'll be happier under their rule, which is just another way of saying they want to be in power. Under socialism, you think everything's the same, everyone's equal. No, there's an elite group, again, just like there is now, that is in power. And those people have power to break rules and do whatever they want and live at the level that they want to live at. It's all about power. The one thing about the United States that's unique, and Britain as well, is that the power is distributed. Even though there are scandals and so on, we have it a lot better, obviously, than a complete dictatorship and so on. But ultimately, these socialistic schemes and stuff, they end up with a group of dictators that run everything. And then socialism quickly slides into communism, and that's where the government makes every decision for you. You're just completely hooked into that, and that has failed every single time. People will say, "Well, we already have socialism. We have Social Security." Well, no, that's not quite socialism. You pay for that. You pay into that.
That's right.
That's a group. Everyone's paying into it, and yes, to some degree, that's socialism. And it depends on how you define socialism. I mean, we're all driving on socially owned roads. We all paid into this and so on. So we have a socialism to some extent. We're really talking about the insidious kind, where there is really no incentive for people to make an iPhone or shoot a rocket to the moon or advance mankind like America has. And it may hurt having to get to those points, but we advanced humanity. America is responsible for some of the greatest advances in human life since the beginning of time. This country right here, is responsible for so many of these tremendous advances that allow people now to, like the internet as an example, that allow people to complain about advances and capitalism and so on. There's no perfect system, but there's no country that's outdone the United States of America for results and for opportunities. If I was dead broke, I'd rather be dead broke in the United States of America, even under current conditions, than some other country, because there's more incentive and opportunity here. But that would go away under other social plans and social schemes. You no longer have the desire and drive. All you have to do is go back to take a look at Russia just 20 years ago. Go take a look at Russia and what the people were doing and what a bland, robotic life they had out there, the day-to-day doldrums, living in that kind of, social scheme.
Sold a whole lot of vodka over there, because that's what they did. They sat around and drank. Can we talk about the bonds? A couple questions, David, on the bonds. What do you got? Because I know you got to go here in a couple minutes.
Yeah. Okay. So let me switch over there real quick here. The bonds are really at an interesting juncture as well. A couple things from when we had our meeting earlier today. Let me just give me just a moment to get into the. So we're interested because we have a couple of mixed signals. That's what makes it interesting. The bonds have a daily reflected wave bottom, and we also have the possibility of somewhat lower prices on the roadmap down to 155.10 or so, maybe into Wednesday. So we're waiting here to see what they do as well, because we do have a trade that we could put on that we think is pretty important. But we need a little more time here, and I don't want to second guess the bond market. So I don't have an immediate long or short position, but I can tell you they're at a critical juncture on the daily chart, and that's what we're waiting on right now, is to see how they close today and so on. So you can take a trial of our work and be in for 2 weeks, and you'll get a chance to see what our next move in bonds will be. Because I honestly don't know just yet what our next move is going to be. That's one thing. That's the one sign. When you're starting to get better at trading, you're much more alert and comfortable and aware that of what you don't know. That's a good sign, because what you don't know is most of the time what the market's going to do. You only know for a short period of time what the likely things are going to be, at least from the level that we're speaking from, and you get much more aware of the times that you don't know, and you just wait patiently for that evidence to come up, and and then take whatever trade is indicated, and of course use protective stops.
Yep. All right, David. How about gold? Got anything on gold today? Gold and crude are the two markets that folks would like to get your take on.
Yeah, the gold market, real interesting. I just want to give a tiny bit of history here. The move up to 1191 was a big forecast that we had. It was about an 80-point move, and all they did was tap 90. They went to 91.70, and we complained at that time that probably was not a good sign for higher prices. We did not forecast this current decline, but we felt cautious anyway about it. So right now we're looking at gold. We don't have a new trade immediately in gold, but I do have something that's potentially, depending on how they handle the juncture that they're at right now, something that leads us into early next week, possibly, that we're going to be talking about trading. We probably won't take that trade. It would be on the long side. We wouldn't take, and I'm not saying go long now, but we wouldn't take that trade until we get a little bit more evidence, and probably into Wednesday of this week. Then we might be looking at doing something with gold. So I hope that's helpful. And again, that's our way of saying we don't have enough evidence, so we're just waiting for the market to confirm. And then the crude oil market, we do have some interesting stuff going on with crude. We're waiting to see a little more action here again with how crude handles today's decline. If they firm up here, and they have acted pretty well, this would lead us to a long position in crude. I won't give the target out, but it would be something that would exceed Friday's high. So I can tell you that it'll be higher than that. And that high was $47.03. So we'll wait on that. And Dwayne, and I apologize, we got into this into the Obamacare and all this other stuff today, but we'll be back tomorrow. We'll get right into the markets. We'll jump on it. We'll cover everything, unless you trick me into something and get me on my soapbox.
Yeah. All right, buddy. We'll see you tomorrow.
All right. I'll see you guys tomorrow. Thanks again.
Right. Take care.
Bye-bye.
All right. Okay. All right, markets. So let me see if Garrett slipped up in here. And he may have sent me an email. I haven't checked my email in a while because I've got so much of it. If you've emailed me and not gotten a response, I'm not ignoring you on purpose. I haven't got to you yet. So let me pop open my email real quick and see if he is on the way. If not, might be he needs the new link. Let me see. Let me see. Okay, I will send him the link in case he's going to come in today. Okay, give me 1 second. Okay. Okay. So now if I put this all back together again, there we go. There we go. And I'll hit send, and then we'll go over these trade alerts. Okay. Okay. All right. Let me get this over here. There. Finally. All right. S&P 500 Emini Futures. Now, this line on this chart, I don't know if that's correct for last week or not. Not that it matters. Yeah, it is. 26, 20, 64, 65. That was last week. Now, this vertical line, this is when Globex opened last night. As you can see, this hour here was Friday's close. This was the Sunday night Globex open. And on our Concierge Trade Alert last night for the S&P, the idea was to be long above 2079 or short below 2056. And so the 2056 did not come into play, but the 2079 did. And so far, we've managed to put in a swing high of 20.90.50. So we'll call it 10 points. It's a 10-point rally. Now, how many points do you need if you're trading the 2420 blueprint? 2. 2 points. So where would 2 points be in the grand scheme of things? It would be at 20.81. 20.81. Right there. That's 2 points. If you're trading the 2420 blueprint, that's the 2-point daily goal. Okay. If you are advanced, if you have graduated to multiple contracts at this point, you might take some of your position off at the 2-point daily goal mark, and you might trail the balance. And depending upon how many contracts you're trading, perhaps you take some more off at 3, at 4, at 5. Perhaps you look left and see where the market could run into trouble and you just exit your entire position. Maybe you leave a runner on. Maybe you trail behind the BBC or behind the CFMA 1. Number of different ways to trail your stop. And as you become a partner, these are the types of things that we'll talk about in not only in the live trading room in the mornings, but the workshops that we have on Thursday night. Okay. Now, with a 10-point run, the S&P 500 pays $50 per point. Yes. It's always difficult for new people because the different markets pay different amounts and they have different margin requirements, and there's ticks and there's points, and sometimes it's 4 ticks to a point and other times it's 10 ticks to a point. But there are only 8 markets that we deal with, and it's either 4 ticks to a point or 10 ticks to a point, with the exception of bonds, which is 32 ticks to a point. So the ES pays, let's do it this way, $12.50 per tick. Okay. And if you're new to all this, okay, it probably would help you to write this down. There's something about writing something down, especially as we're hearing it and we're learning it, we're absorbing it. If we'll write it down, that's why the teacher was always hounding you in school, or why the preacher on Sunday says, take notes. Well, I may have a learning deficit because if I'm busy trying to write down what he just said, I can't hear what he says next. And then I get behind, and then I'm just totally lost. And I'm nudging, my wife going, okay, what did he say? What was point 3? And she's like, he's on point 7 now. And I'm like, yeah, see, that's why I don't take notes. So it's not being lazy. It's just that I need to absorb the whole. I want to get the point. I'm assuming that part 3, that it has all these different points to ultimately make the point or a point, right? But if I hyper focus on point 3, I'm going to miss 4, 5, and 6, and then I'm trying to get caught up at 7, and it's a mess. I end up, I don't learn anything. This is why I highly recommend when you take the free trial, or even if you've become a partner, 4 ticks per point. Okay, so that's $12.50 times 4. It's $50 per point. There's 4 ticks per point. This is why I highly suggest that rather than try to match Michael click for click, tick for tick, Because if you come in on a free trial and what you're really looking for is a trade calling service, what we do in the live trading room in the morning, that's really not what that is, okay? We're actually attempting to teach you how to trade so that you won't need, a guru or somebody to be your trade caller, right? I mean, that's always been our goal since day one. Now, we've come up with other products to help fill the gap. It's like gap insurance, okay? There's an old saying everybody's familiar with, give a man a fish, feed him for a day, teach him how to fish, feed him for a lifetime. Okay. Well, fishing and trading on a scale of 1 to 10 degrees of difficulty, I guess it depends on where you're fishing. There are some places it can be really hard to catch a fish, right? But if it's a good fishing hole, you can put a worm on a safety pin on a piece of string and you can catch a fish if it's a really good fishing hole. But there's also, man loves to complicate things. Oh my goodness. Have you watched some of the shows like on Saturday on the Outdoor Channel? I mean, this guy might have $9,000 worth of fishing gear. And I'm not talking about the boat. That's a whole nother bill. I'm just talking with the vest and the pouch and the rod and the reel and the graphite and the carbon and all that. And I'm not knocking any of it. If that's what you enjoy doing, I mean, I think that's awesome. It's good, clean fun, right? I mean, the fish don't like it much, but nobody asked them. So a simple thing, fishing, a safety pin, a night crawler, and a piece of string in the right fishing hole, within minutes, literally, you'll be frying up lunch in a pan. How does that go? Frying up in a... Anyway, lyrics to a song, I forgot. Now, we do the same thing with trading, okay? Trading's not easy, but it can be simple, okay? Now, what's the single best thing you can do as a fisherman? Is it the $9,000 of equipment with the graphite rod and the bobber and this and the... Or is it the good fishing hole? Think about that for a minute. Because if you're in an area where they aren't biting, I'm sure most of you have heard that term before. Yeah, they're not biting. Or as you walk up to the river or lake or creek, are they biting? Oh, they're jumping in our boat. Or mostly you hear, nope, they're not. Haven't had a bite all day. Okay, so if you're in an area where they're not biting, all the equipment, all the fancy gewgaws in the world are not going to help you. You're going to end up stopping by Safeway on the way home, or Piggly Wiggly, depending upon what part of the country you live in, and you're going to get a big old fish, and you're going to ask the butcher to wrap it like I caught it. You're not going to get the one in the little styrofoam tray with the label, and you're going to go wrap it like I caught it. Okay. Now, trading and fishing. Okay? We don't want to trade where there's no volatility. We don't, because that's kind of like there being no fish. You can't catch what's not there. And if there's no volatility in the market, then you're just going to get chopped around and eat up with commissions back and forth, and it's just a waste of time and energy. And so we have ways of learning to look at a market and see if there is some volatility, if there is some participation. Is it something that we want to become involved in? Now, as the price started to climb up out of here, I mean, this was a beautiful thing, right? Price just worked its way right on up. Now, we're looking at an hourly chart. Inside of each one of these hourly candles, there was some leg and retrace and leg and retrace and leg and retrace. In fact, this hour right here that triggered our daily goal, let's go look at that thing. That was the 10 a.m. hour Eastern. Let's go look at that on a range chart, just like we use in the live trading room. Let's see what that looks like. That'll confuse you guys with those white candles, won't it? But maybe I can help you to learn something. Yeah, why don't I do that? We can go to a different chart in a minute, but just for a moment. Okay, now look at this. All right, 2079, 2081, daily goal, boom. I mean, whew, nice, smooth. But that's not really, I mean, that is really what happened, but beneath the surface of the water, there was a lot going on, okay? So this is the 10 a.m. hour. So on our 4-tick range chart, we're going to go to the 10 a.m. hour. Okay, now I'll drop a vertical line at 10 a.m. or as close as I can get to 10 a.m. Because remember, on a range, now this is not a 4-tick chart where it goes flying by like a blur, you know. Every candle is 4 ticks tall. We do that so that we are able to know ahead of time where the next candle is going to open, at what price. In other words, if once a candle starts building, if it doesn't go below the current low, we can know with certainty where the next candle to the upside is going to open. How? Because every candle's 4 ticks tall. So we can have our DOM set up, we can have our order on to be long at a certain price, okay? All right, so I'm trying to zero in on 10 o'clock here. 9, there's 10. 10. Okay, that's 9:51. That's 10:01. Okay. Now let's even do this too, because some of you aren't familiar with range. Let's break this down to 1 minute. Okay, we're going to take this hourly, go down to 1 minute. Here we go. Okay. All right, now with 1 minute, we can know exactly, because we're not dealing with price, we're dealing with time. The range chart has nothing to do with volume, nothing to do with time, has everything to do with price, okay? So as we slide to the right, we trigger here, okay, at 10:37, and we run up to 2081 over the course of 1, 2, 3 minutes. Now, we did not trade through 2081. What does that mean? Well, it means that if you are not trailing your stop, Well, in this case, if you just left it alone and did nothing, you were okay. Because the drawback did not go below. I mean, your stop loss is way down here at 2077. We use an 8-tick hard stop on every trade. Okay? So 2077, right? So here's your hard stop. At 4 ticks profit, the way we trade in the live trading room is we move our stop to break even at 4 ticks. Okay? Now, as price goes up here and hits 2081, you've actually got, because you're entering at 2079.25. So what you really have here is you have 6 ticks. You really needed to go 2 more ticks. Okay? We move that stop at break even. We go to here. And then as price moves higher, we lock it in, lock it in, lock it in. Until price comes back and stops us out. Okay? And then price makes another run. Okay? And then we're well up into these big numbers. Now, I said all that to say this. Okay. What goes on inside of that hourly candle is very important. Okay. Now here, man, that thing just looks smooth as glass, right? No worry, no muss, no fuss. When you're using an 8, oh, I should take you back to this. Okay. Let me finish it. Now, the trigger was, again, 2079. So 2079's up here. Okay. Remember the Concierge Trade Alerts said to consider being long above 2079. Okay. So that's here. Okay. Here we didn't quite make 79. Got 78.75. So 79 and a quarter. $79 right here. No, right here. That's your trade. Okay. This is going to be really important for you guys that are trading one trade a day. Okay. Some of you have the indicator set, some of you don't. So some of you will be trading just purely off price. Some of you will have the benefit of the indicator set. This is where the benefit of the indicator set comes in. All right. Bullish cross. Price pulls away. Price pulls back to physically touch. Right. Up close by the open of the next candle, which is 78 and a quarter. So you're actually getting in a couple ticks before the trigger at 79. Now this thing runs from 79 up to 84. It's a 5-tick run. It's a beautiful thing. It pulls back. So you see. So I've shown you the hourly. I've shown you the 1 minute. And I've shown you the 4-tick range. Okay. Now, let's say you didn't take this trade. What other trade might you have taken? Well, you'd be kind of late to the party, but, I mean, here's the number. when you get a close above the trend line, which is hiding back in there somewhere, because every candle is the same height. So you'd be getting long the open of this candle, which is 80 and a quarter. And so 82 and a quarter. That's your 2 points for the day. Okay? Okay. All right. So let's go to bonds. The alert said to consider being short below 156.09. ZBC. Or to be long above 157.21. 157.21 up here, we can see that didn't happen. 156.09, this initial move is 18 ticks. Okay. Bonds pay 31.25 per tick. Okay. Oh, he tried to get on and couldn't. Garrett did. Hopefully he'll be right back. Let me keep my eye on the chat box. All right, 156.09 down to the swing low here. 155.23, 18 ticks. There's 32 ticks to a point. 31.25 per tick. 31.25 times 32 is $1,000 per point. Okay, so a 1 point move in bonds, $1,000. From 156.09, had we made it down to 155.09, right here, the vertical line on my cursor, that would have been $1,000 per contract. Okay. Okay. But it didn't. Dropped 18 ticks. Did I miss the recap on the S&P alert? We didn't have an S&P alert, Daniel. I'm not sure what you're referring to. I did. Oh, you mean the concierge alert? Oh, yeah, we just covered that. 2079. We looked at it on a 1 minute chart, and we also looked at it on a 4 tick range chart. We looked at it 3 different ways. So yeah, I'll be uploading this as soon as we're done here in a few minutes, and so you can fast forward up and check it out. All right, 18 ticks on bonds. We got to get moving. All right, on crude oil, this was the deal on crude. On crude, we said to consider being short below 45.95. Alert 45.95. 45.95, okay. All right, this initial swing low got down to 45.75. Okay, the bottom of this red candle. That's 20 ticks. It's $200 per contract potential. Okay. Now, we all know nobody gets out at, and that wasn't the swing low. I mean, the swing low is actually way down here. at 45.56. So 45.56, that was more like 40 points. The potential was $400 per contract. Well, actually, look what happened. This came, important prices, important areas are almost always tested. So this candle closed here, opened here. We'd have to go to a smaller time frame to see how it played out, but it ran here, and then it could have run all the way back down. Okay. See why you need, and now it gets above again, and then it gets below again, and then it gets way above, and then it gets below again. Gets down to 45.84. That's exactly 10 ticks. Crude pays $10 per tick, so there was plenty of opportunity to do that. Okay? All right. On the long side of crude, we had said to consider being long above 46.65. That one, it's right here. That's 46.65. And the swing high is 46.73. So from 65 to 73, that's an 8-tick move. Okay? That's not the 10 ticks you need to make your goal for the day, but it's far enough to get your stop to break even. Okay? If you're trading the 2420 blueprint, if you are just looking for your $100 per contract per day, if you're using the aggressive risk management. All right? All right. Next on the agenda, Euro. What do we got going on there? Okay, the open last night was right here. Okay. 6E. Long above 1065, short below 1010. Okay. 1010's right there. So that was not a good opportunity. 1010, the low 1006, okay? So just call that a stop out. Got to have some stop outs because that's the truth about trading. Euro 6E. Long above 110.65. And the euro, we've had less volatility and less possibility on the euro of late than any other market. I threatened to fire it a few days ago, and then it bounced back and gave us $1,000 per contract potential day, and then it went flat again. So we have to figure out what to do with the euro. All right, soybeans. Consider being long above 890 or short below 878. Okay. 890. Oh, the high is 891 right there. Okay. On the short side, short below 878. And that has not triggered. 878. Market's going to close pretty quick, so probably won't trigger on the short side. All right, what's next? We already did crude. Dow. We haven't done the Dow. All right. On the Dow, we said to consider being long above 17,670. 17,670. Okay, 17,670. All right. Swing high. Well, on this one, we got up to 17,697. So from 70 to 97, that's 27 ticks. Important prices, important areas, almost always tested. And so price gets back below the trigger and runs up again, this time to 96. And so that would be 26 ticks. Okay. And then price right here, the low is 67. So it does it again. And this time the swing high is, okay, from 70 up to that's going to be 36. 36 ticks so far. Now, the Dow only pays $5 per point. So you actually need 20 points. So they're 27, 26, 36 so far. You need 20 to be done for the day if you're trading the blueprint. Okay? All right. Russell. Okay. Let's put in a vertical line where the market opened last night. Right there. Got it first try. Good for me. All right. Last night, the alert for the Russell said to be long above 1161. And that's what they call a real humdinger. Well, somebody might. I don't know. Maybe you don't. Oh, come on. Oh, come on. What? I really would like to just get us. There we go. Okay. So, it said to consider being long above 1161. So now that I've got a straight line, oh, 1161. All right, the swing high, I better put that, or I'll forget. Alert, 1161. Okay. swing high, 1183. And so from 61 to 83, that's 22 points. 22 points. The Russell pays $100 per point. The S&P pays $50 per point. If you were clever enough to know how to get out at the exact swing high, there's $2,200 of potential profit in that trade. I don't have that talent, that skill, that ability, that luck. I don't. I do not possess it. Now, what I do have, what I do know how to do, is I know how to do Fibonacci extensions. I know how to do any number of different things to project prices. I know how to put a hard target out there, right? Because it pays $100 per point, you only need 1 point to be done for the day. If you're trading the 2420 blueprint, if you're starting out your trading business and you simply want to grow your business to become a 20 contract trader over the next 24 months, you do that through the use of the 2420 blueprint. Okay? Anytime you get off course, running the ditch, not sure what you should do, you just refer back to the book. The book always tells you what to do and puts you back on track. Okay? We have a tendency when things go really right or really bad, we lose our bearing. We don't know where we are. We got lost. We get lost. Okay? That's the benefit of you writing your business plan and writing your trading plan. Those are the things you do. Okay? When you become a CFRN partner, first thing you want to do is you want to get started. Of course, coming to the live trading room, coming to the classes, watching the videos, absorbing everything that you possibly can, but also writing that business plan and trading plan. Two very different things. Both are necessary. We give you the ingredients. We tell you what a good trading business plan will have in it, and we tell you what a good trading business plan will have and what a good trading plan will have. And then you write it out in your own words based upon your own personality and what you feel that you're capable of. No unrealistic expectations. No, I'm going to take 20 points a day out of the S&P. No. Got to keep it realistic. Okay? In fact, I mentioned earlier in the show that I would point you to an article. And let me do that right now. Okay. Google goals for Emini traders. Okay. After the advertisements, the first article, 4 critical goal-setting tips for Emini traders. Okay, I wrote this back in 2012. People with goals succeed because they know where they're going. It's as simple as that. Earl Nightingale. I really encourage you to read this. If you're a partner, it's like a must. In fact, this is inside of the information we give you that helps you write your business plan and your trading plan. If you're not a partner, or you're thinking of becoming a partner, if you plan to trade, please come read these. They apply to you. Goals must be clearly defined. Goals must be realistic. Goals must be attainable. Goals must be reasonable. Okay? 4 things. So just Google goal setting tips for Emini Trading. Well, here, I guess I can just put it in the chat box. You don't have to Google anything. All right, there you go. It's in the chat box. It really, really will help. Promise. Okay. So the alert's 1161. It ran 22 points. That's the potential. Now you can set a hard stop. You can trail the balance, part of the position, however you want to do it. It's your trading business. You do it the way that fits you, that suits you. Okay. The Russell pays $100 a point. This is a 22-point move. This was the potential for the 1 contract trader. Well, but what about the 10 contract trader? Can he play? Well, insert, indicators, volume. Okay. Now, yes, the Russell trader can play, but he has a hard time playing in the middle of the night. I mean, the markets are open at the 3 a.m. London Open. Let's see. $200 contracts in that hour. So, yeah, you can get in, but it's thin, right? Volume starts to pick up with Wall Street. 1,300 contracts in that hour. In the next hour, 15,000. I'm sorry, did I say 100? Yeah, that's 11,000. That's 15,000. Okay? So 11,000 contracts in an hour, 15,000. Could you put on 10 contracts? Yes. So that number would be times 10. Yes. Am I telling you or making some kind of, am I insinuating that you should have or could have made that? No. I'm just telling you it really happened. That's all. What you're able to take out of that trade is based upon your skill set, your ability. And don't let anybody tell you anything else. Not some gadget, widget, crystal ball, guru, indicator, oscillator. Whatever you can take out of it is what you can take out of it. Okay? That's it. All right, one last market, gold. Okay? Consider being short below 1136. This first move down dropped to 1135.60. That's a break even or a stop out based upon how you entered it. Just call it a stop out. Because stops are the reality of trading. Then we get a swing low down at, let's just go with this one. 1133.1. So from 36 to 33, that's 30 ticks. But it was a 0.1, so it's $290 per contract potential. $290 per contract potential. Okay. So if you get stopped out with 8 ticks, you have an opportunity here to recoup that, and the market is favorable and continues in that direction. Now, important prices, important areas, almost always tested. So price gets back above the trigger, comes back down, opens this hour, continues down, and we get down to a swing low of 34.50. So that's 15 ticks or $150 per contract right there. Okay. Could you trade 10 contracts? Well, in that hour, there was 5,000 traded. So I guess the answer is yes. Okay. If I've missed any questions from anybody, please copy and paste them into the chat box, because I have a mentoring session and I have a million things to do before the meeting tonight. Now, for anyone who doesn't know, have a look here real quick. Okay, I can't answer. Sorry, I can't answer that during the show. One Trade a Day is back, part 3. Okay, read this. It's to the best of your ability. Okay, it's got a bunch of information. Now, it's also got a link. That's really what you need. You need this link here, which will take you here to the One Trade a Day. There's a video that tells you how you can place the order on your smartphone. Okay, here's how the One Trade a Day works. Based upon whether you sign up for one market or 2 or 3, at 10:30 a.m. you'll go check your market for your trade. Place an order using a bracket and or trailing stop. End of the day, check the results. Repeat daily, Monday through Friday. Okay. All the information, I think, this Michael did a great job on this video, by the way. Bringing you up to speed, tells you where we're at with everything. Okay. I've covered it all to the best of my ability. I want you to take a moment to go read this article, The Truth About Trading, if you haven't already. Now, here is where you can pick your markets. If, for instance, you want to trade 2 markets, you'll click here. And you'll be able to make your payment via PayPal. Okay. Now, this is a month-to-month relationship. Okay. So, it's a subscription-based model. When you get down here, when you right-click and download the disclaimer, the non-disclosure agreement, okay? I don't like having to talk about this, but, I mean, obviously the NDA is there for a reason, all right? You know, take advantage of, this is meant for you, for your household. It's not to be traded, swapped, shared, sold, anything else. You know what? I don't have to tell you that karma is because I can use scripture instead. I can say, whatsoever a man soweth, that shall he also reap. So, you're going to download, you're going to right-click. Depending upon which browser you're using, you're going to right-click, save as, save it to your desktop. There's a Word. If you don't have Word, right-click, save the PDF to your desktop. Okay. Print it out. Read it. Initial each page. Sign it. Pop into your local bank. Okay. Most notary services are free today. They used to charge a couple bucks. Most of them now, because it's one of the few things they can do for free to try to get your business, they'll just sign it, you know. You got to show them your ID. They'll sign it. You come home and you put it into your scanner, scan it back in, email it off to us. If you don't have a scanner, sure you have a printer, so you can print it out, okay? If you don't have a scanner, at the bank, you could ask them, hey, is there any chance you could scan and email this for me? I promise you they'll say, oh, sure, what number? Or I'm sorry, what email address? If for some reason you can't get it scanned and emailed back with your signature and the notary, then fax it, okay? Somebody just asked a very good question earlier, what's your fax number? Michael's got the fax machine, and I meant to ask him earlier. Let me see if I can round him up. Do you have a fax number there at your desk?
I can get one.
He snuck in on me. Because I thought I heard you. I remembered you saying something one day about the office you were working in there about a fax machine, and I thought, okay.
Yeah. Give me just a minute. I'll go find out what the fax number is.
Okay. All right. Cool. Now, again, guys, don't get in a car accident trying to rush to the bank and get this. God willing, if he, capital H, doesn't come back tonight, we're going to be here tomorrow, and if he doesn't come tomorrow, bless God, we'll be here Wednesday. So this is hopefully a long-term relationship, so don't, it's okay to be excited, but keep it in its proper perspective, okay? Now, we're not magicians. We're not Penn and Teller, okay? Just as we did years ago with the tweets, just as we've done for years now with the Concierge Trade Alerts, just as I do on live radio many days, I give you what I feel are my very best trading opportunities in different markets, okay? Somebody asked me earlier, they typed into the chat box, well, at what price would you consider going short? Because we were having that conversation with Mike Reed and with David about what if price tops out up here? At what price would I be willing to go short? I typed in 2076.
Okay.
And I'm sure, yes, you got it?
I got a fax number.
Okay.
82.
Hang on.
828. Okay.
Fax number 828, okay.
256.
256, okay.
4346.
4346, okay. 828-256-4346. And I'm going to hit send to all. Okay. So there you go, guys. Now I'll go and I'll put that on the One Trade a Day page. Now on the One Trade a Day page, which is where you're going to get your Word document or your PDF. Okay. It does tell you that with the good comes the not so good. Free trials will have to be limited from this point forward to 1 per week. And if you've been to the free trial page lately, you know that our next free trade it's going to come out Wednesday at, I think it's 1 p.m. Eastern. I put it in there for you, so you should be able to find it. Now, I don't think I have... Oh, I do. Yeah, I do. I get it right here. But I hadn't updated this page. Pretty sure it's Wednesday. Now, the last free trade that we gave out was on Friday. Consider being long above, or actually it went out, Thursday night. And it was to be long crude above 46.90 or short below 44.80. So I'm going to put the fax number on this page too. Now, again, don't get in a car wreck, okay? If you don't get your paperwork in tonight, we're not going to start your clock running, even if you've already sent in your payment. It doesn't go, again, it doesn't start counting until we actually start sending you the alerts. So if it takes you a day or two to get your paperwork in, just relax. Everything's cool. Copacetic. All right. So what I did want to look at was that crude trade, that free trade. Is this it? Oh. Is this it? Crude. Maybe it's this one. Let me scrunch it up. Whoa. Okay. And so we said to be long above 46.90, and it went up to 47.03. So there was 13 cents in that trade. It takes 10 ticks to get your goal for the day if you're trading crude. Okay? Now, there was also a short side to the trade, which hasn't triggered 44.80. The 46.90 has not triggered again either. However, I do want to point out that as with all trades, with concierge trades, with free trades, until a new trade comes out to replace the old trade is still valid. So if we were to dip down below 44.80, there's a trade there. And if we rally back above 46.90, there's a trade there. So the last free trade we issued last week, Thursday night, I believe it was crude oil to be long above 46.90, went to 47.03, short below 44.80. Okay, and that's still live. Okay. There was a question in the chat box. What is the difference between the Concierge Trade Alerts and the one trade a day? Difference is, with the Concierge Trade Alerts, you get 8 trades, or you get 8 markets every night. With the one trade a day, you can get as few as 2 or 4 or 6 or 8. Okay, mix and match. Pick the markets that you specifically have an interest in. Now, for the Concierge Trade Alerts, you have the benefit of having the number before the London Open, before the Wall Street Open. That's important. On the flip side of the coin, at 10:30 a.m. Eastern, when the one trade a days come out, you've already had the London Open, you've already had the Wall Street Open. Any 10 a.m. economic news reports that came out, anything from GDP to new home sales to whatever it might be, that's already had a chance to impact the market. Okay? So with Concierge Trade Alerts, you're getting a leg up on info before those important events, before London opens and before Wall Street opens. With the one trade a days, you're getting the information with the hindsight of how did London respond? How did Wall Street respond? What were those new house numbers? Now we're going. So the trades come from a different perspective. Okay? So that's the difference. Can you make sure I get the trade alerts and trade zones automatically, please? I'm a new CFRN partner. Oh, that just got typed in. Okay. Yes, Gary, you will. Now we have a lot of new partners, and so I have a lot of work ahead of me getting all of this input. But yes, you will get them automatically. As soon as I get you input into the database, you will get every Monday morning an email that has the weekly zones, the link for the trading room, the password, the link for the Wednesday night workshop. Okay? Now, what I recommend to all of you who are new, go to your contact list on your email client. I want you to add 3 contacts at CFRN.net. at Citrix, CITRIX.com. And last, at citrixonline.com. Citrix Online, all one word, lowercase, no hyphens, citrixonline.com. Well, yeah, but what goes before the @ sign? Nothing. What you're doing is you're whitelisting a domain. So anything, if it came from Susie May at CFRN.net, you'd get it. If it came from Billy Ray at citrixonline.com, you'd get it. Again, you're not just whitelisting a person, you're whitelisting a domain, okay? It's very important that you get, because the Citrix ones, those are the ones that have the reminder link for the live trading room each day, or the reminder link for the radio show and all that kind of stuff, all right? The meeting tonight, 6 p.m. Eastern, I want to keep it as brief as possible. I just want to, it's kind of like a huddle, you know, before the game starts, answering the last-minute questions. Back to what I said before, okay? We will give you what we have given you for the past over 4 years now. Started with the tweets, grew into, well, started with the weekly trading zones, which grew into the tweets, which grew into the Concierge Trade Alerts, which has now rolled into the 1 trade a day. Okay, it's our best information. We're not prophets. We're not psychic. We cannot predict the future. All we can do is give you our very best work. You'll have days that are marvelous. You'll have days that are mediocre. You'll experience the truth about trading, which is why it's very important. And I really want you to commit to going to this page, right here. Click that. Oh, you got to be logged in for that. Well, good, because you should be. You need to have a, if you're going to be participating in this, you're going to have a username and password, okay? Yeah, the next free trade's Wednesday, November the 4th at 1 p.m. Eastern. Time left to the trades, 1 day, 22 hours. Okay. That's a picture of the trade, the last free trade that we put out. Okay, and now the truth about trading. Last week, we had put out a trade on the S&P. The short side of the trade was stopped out. And I told everybody, I said, we are coming up on the Fed announcement. And there's a very good chance that during this Fed announcement, we will be given an opportunity to take the other side of that trade. This is, I had a different chart marked up, but that's okay, this will work. With 3 minutes to the Fed announcement, 2076 was the trigger. It ran right up to 2079. But we always preach, don't trade in front of the Fed. I preach don't trade in front of any major economic events. Michael and the guys will sometimes trade crude or natural gas on a bracket, but that's a whole different type of trading. So I said, even if the opportunity presents itself, don't do it. Not right ahead of the Fed. And sure enough, beautiful work of art. 3 points, but we said no. 90 minutes after the Fed announcement, it came up again, and this time I said, yeah, it's been 90 minutes since the Fed. There's no chance you're going to get cramps while swimming. Remember, Mom, at the picnic, you had to wait 30 minutes after you had to picnic lunch before you could get back in the pond. Okay. And it ran all the way up to 85 1/4. So basically it was about a 9, as I recall, it was a 9-point move from 2076, from 76 up to 85. Yeah, it's a 9-point trade. Beautiful. And it didn't break any rules. We set this out. Now remember, on the short side, we got stopped out. Went 3 ticks in our favor, reversed, and never looked back. Just plain old stop out. And then it triggered twice on the long side. The first time we said no. The second time we said yes. Okay. All right. Let me see if there's any other questions. And then I'm going to get out. Better said, after choosing in our minds which markets we want to trade, shall we just email you to tell you? You know what, Dan? That's one of the things I'm going to be working on this afternoon. Okay? Exactly how I'm going to handle the markets that you want. We kind of have run into a little bit of an obstacle with that. I thought in my, you know how when you plan things out in your mind, you know, your step A, you know, flap A falls into slot B kind of thing. Well, I'm still working on that. I want to do it in a way that has the fewest moving parts. It's effortless, so to speak. So my plan is that the meeting tonight, I'll be able to tell you exactly how to do it. You'll either go somewhere on our site and enter it in, or, as you suggested just now, you'll email it to me. But what I'd rather do is I'd rather have everybody do the same thing all at one time, okay? Rather than they get scattered around and I misplace one. But give it some thought, okay? Because the 8 markets are the ones that you see us do here on the show every day. S&P, Dow, Russell, soybeans, all the regulars, okay? So if you're picking 2, figure out which 2 you're going to pick. If you're picking 3, if you're picking 5, you know, if you're picking 8, then that makes my job pretty simple. Well, no, it doesn't make it simple, but delivering them will be somewhat simpler. For those who choose 8. Thing is, again, I'm not, just because we're rolling this out doesn't mean Dwayne suddenly went psychic and he can give you all home run, knock them out of the park trades. All I can do is give you my best work, and I will. I'll wake up early, I'll stay up late, I'll do the best I can, okay? But that's all I can do, and I won't ever promise you more than that. I won't give you a bunch of flowery prose about, you know how awesome and toe in the sand and all the money you're going to make while you're sitting at the breakfast table in your boxers, eating Fruit Loops and reading the sports page. I'm never going to do that. And I'm so okay with that, okay? I'm always going to deal with you straight up, and I'm always going to be able to look in the eye, okay? Now, it is a subscription-based model, okay? So it's a month-to-month, just like when you rent an apartment or a house. There's 2 types of rental agreements. There's month-to-month, and then there's the annual lease, all right? This is a month-to-month tenancy. So if you pay for the month, now you're going to get the information for the month. If you decide it's not for you, you don't want to participate in it anymore, no problem, no hard feelings. All you have to do is notify us, give us 5 days notice, if at all possible, before your current subscription expires, okay? Now, you can go into PayPal, and take care of it, but we're happy to take care of it for you. Just give us the 5 days notice. Now, somebody this morning also asked me a question. I'm having problems with PayPal. Can you just take credit card over the phone? Yes, we can do that if you have some issue with PayPal. If you can use PayPal, that's good because it kind of simplifies things. It keeps it all in one place. Okay? Now, let's say you decide, for whatever reason, that you don't want to do it anymore, and you send us a 5-day notice, and we either drop the ball, lose the email, whatever. Here's the worst case scenario. You tell us 5 days ahead of time that you want to cancel after this month, because you're buying a month at a time, okay? When you submit your payment, you're paying for a month. And then when you get billed the next month, you're paying for that month, okay? So anytime that you want to stop, you simply let us know and we cancel you from being billed again, okay? The worst possible thing that could happen is that somehow we drop the ball and the cancellation doesn't go through. You notice on your statement that even though you said you wanted to cancel, you somehow got billed again. Maybe PayPal drops the ball. Worst thing that happens is you alert us and we give you your money back. Now remember, you're buying a month at a time, okay? If you decide to cancel, you won't get billed again. If by accident you get billed again, after you said you don't want to be billed again, then PayPal will issue you a refund. We'll call them up and give them what for, and they'll issue you a refund, okay? So you don't have to worry. All right, I got to go. I've covered all the markets. Look at that thing. All right, now, last week we had, let me just show you. I can't put up this week's zones, but I can show you where last week's was. This was the highest weekly zone for last week, okay? 2110. Okay, so there you go. I'll leave this chart running. Where's the link for tonight's meeting? I haven't created the link yet, but here's where it will be. It will be right here. On the Google Plus page at the very top, it will say, you know what? Why put it off when you can do it now? Right? That's what I say. I'm going to just schedule it right now. And then the link will be there, and nobody will have to wonder. Let's see. We'll call it one trade a day launch meeting. Okay. Only for one trade a day clients. Michael and I will be around all afternoon, so if you need to reach us, you can call us or email us, 949-42-EMINI, or support at CFRN.net. Okay, occurs once today at 6 p.m. Eastern and the English language. All right. Okay. Okay. Guys, I would ask you to keep my mom in your prayers. She's in the hospital. She's not doing very well. I may be taking an unexpected trip to Georgia here. She went in and with one thing, and they fixed that, and I'll be doggone it, she didn't catch pneumonia from being in the hospital. So, one trade a day, pre-launch meeting. Tonight. Two. 2:15 at 6 p.m. EDT. Yeah, I might want to put the link in. There we go. Okay, so everybody has the link. Okay. Tonight, 6 p.m. Eastern. Thank you for asking that question, because that's one more thing I don't have to tie up brain cycles with later. Trying to remember to come back and do it. So thank you, Mike. Okay. Gartrell, I missed some of the trade alerts because I was in the trading room and stopped looking at the alerts. Well, that's okay. That'll happen. You know, don't stress yourself. Because you're relatively new, you're absorbing so much at one time. So just go easy on yourself. It'll all come in time. Okay? Okay. All right, guys, I'm done. Got to run, and I'll leave this chart up and running. Now, we've taken out that high from the 18th, the one that Mike Reed brought up, the August 18th high. That's kind of a little bit important. From a fib standpoint, if we look at just the last leg up, which has been almost parabolic in nature, in other words, straight up, a 24% retracement would be right around 2090. So, I mean, this is a hot little area here, 2085. And then look, the 50% retracement falls right at the weekly zone last week, 82.83, which was also this high. So if this thing starts to sell off, I would expect there to be, if it gets this far down, okay, I would expect there to be really good support at this 2081, 82 area, okay? Now, if the momentum is that strong to the downside, then this 2076 still stands. Okay? All right. I'll see y'all tonight. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.